Hey there, everyone. Thanks for checking in. So, I want to go through the markets here. Now, I hate to say this. I mean, I really do. Because I age myself. I don't feel old. I honestly don't. But I've been doing this for like 30 years. Well, I did it for like 30 years. Now I'm teaching people in my next chapter. But regardless, it's a very bizarro market. But you know what? It's not bizarro. It's not strange. From a quote unquote logical point of view, there's some weird stuff going on. Like, for example, today, the GDP came in way better than expected. I think estimates were two. I think it came in at 3.2 or 3.7. Anyway, regardless, it was way better than expected. Now, why is this weird? Why am I alluding to this? Well, because the market is kind of still going higher. And if the economy is doing really well, guess what? It means the Fed is not going to cut interest rates. But one of the reasons why the market is going higher is because a lot of people are thinking, oh, the Fed is going to cut rates. So if you just look at this from the perspective of like Mr. Spock on Star Trek, like pure logic and math, it kind of doesn't make sense. But if you look at the market from the point of view of the market is human psychology and people can be very irrational, it completely makes sense. It's a positive feedback loop in tech. People don't mind paying higher prices because they think the price is going to continue to rise. And some of these moves I've seen are pretty much like ridiculous. But here's the thing, and this is what I tell my students: if you're long, just stay long. Don't question it. Go for the flow. Make sure you're checking out how much money you're making in your account. And that's it. But be ready for a quick reversal, because when that reversal comes, and it will, markets always reverse. I think it's going to be a fast one. I don't think it's going to be a slow one. So here's the S&P. Okay, let's check this out here. It didn't really do much today. And we've been watching Bitcoin over here a lot too. So if you're into crypto, make sure you come back. And I think this is a really good lesson here for two reasons. If you're just new and you're starting to learn about how to trade, forget all this bizarro mumbo jumbo like Elliott Wave and Gann theory, and just check this out, like what I'm talking about. Basic things. You notice how if we look at Bitcoin going back to about 2 years here, look at how precise these levels are. This support turned into resistance. This resistance turned into support. How does that happen? Well, it's because of psychology, right? People bought here, and assuming they still held, when the price went lower, they're underwater all of a sudden. And they're like, oh, if it ever gets back to my level and I get out of break even, I'm going to. See the bottom there? More really important support there. It turns into resistance because you have all these remorseful buyers trying to get out at break even. So when the price finally gets back to where they sold, they're like, oh, yeah, that's where I bought. If I can get out at break even, I will. And this, you may be saying, well, that was May and this is August, months later. Markets have a memory. Market memory means price levels that are important can stay intact for a long time. Now look at this. What was resistance here became resistance over here. This is because there's people who bought over here who regret buying when the price went lower. It gets back up to their price and they can get out at break even and they're like, oh, I'm getting out. So if you have enough remorseful buyers placing sell orders at the level that was resistance, it can remain resistance for a while. So what does this tell us? Buyer's remorse can turn support into resistance because people buy, the price goes lower. They say, if it gets back to my price, I will sell at break even. Buyer's remorse can turn support into resistance if there's enough of the sellers. Buyer's remorse can also keep resistance intact. People buy, the price goes lower, finally gets back to their level, and they're like, oh, I can get out of here, break even. Okay, so resistance can remain resistance. So Bitcoin had resistance there, resistance there, resistance there. Now, the recent turn here was at a former peak, a former resistance level. This is a good example of what we call the crowded trader, the buying rumor, sell on the news, buying the rumor, sell on the news. Pretty much everyone who wanted to buy Bitcoin bought it ahead of this news, which was very well telegraphed, that the SEC was going to approve these Bitcoin ETFs. So guess what? When the news finally comes out, well, anyone who wanted a position got one. So there's going to be no one left to buy. So it doesn't go higher. Then it can only go lower because some of the buyers start to look around and say, well, I don't know. This doesn't seem to be working out the way I thought. I better sell. But they go into the market looking for buyers, and guess what? They can't find any. Well, I mean, they can find some, but they're going to be small. You know what I'm saying? And this forces the downtrend. So this is the classic buy on rumor, sell on the news. People buy on the rumor. The people that want to buy, the traders that want to buy, the investors that want to buy, they buy. Everyone has a full position. When the news comes out, regardless of what it is, most buyers are full. They're like satiated, I guess, if that's the right word. If there's no one left to buy it, it's not going any higher. So that's something to look at. All right, let me just kind of finish up here. Let's just take a look at the tech sector. This is just ridiculously overextended. But remember, bubbles can go on for a while. So we don't fight the tide. We go along with it. We don't need to question it. People might be saying like, oh my gosh, AMD's earnings are P ratio is 1400. Who the hell cares? We're following the herd. And that's okay as long as we're conscious of that. Because when the herd starts to slow down and starts to get reverse-ish, that's when we make our move and get back in on the short side. So tech is overextended. Healthcare is trending lower. Here's healthcare. And financials are pretty much overbought as well. So the three biggest sectors in the market, tech is up but overextended, which means there's a good chance it's a reversal. Financials are up, but they're overextended. That means there's a good chance there's a reversal. Healthcare has already started to trend down. So if you're long, stay with it, but make sure you're ready for a quick turn because this is the type of market where you could look at your positions. You could go out and have lunch with your friend you haven't seen in 2 years, get home, and it's like, wow, everything is down like 4 or 5% from where I left. I'm not saying it's going to happen tomorrow or the next day, but in markets like this where people are really positive and bullish, the opposite of conventional wisdom tends to happen. All right, everyone. Thank you for hanging out and listening to me rant, and I will hopefully see you soon.